Good morning, traders. Welcome to another edition of Technical Talk. My name's Aaron Hill, and today is the 28th of January, and time is now 9:17 a.m. GMT. So where are we in the markets right now? Asia equity indexes closed higher across the board, with Japan's Nikkei 225 up more than 2%. South Korea's Kospi also up by 1.9%. And Australia's ASX 200 climbed 2.2%. Now, in European cash equity markets, right now, we are lower across the board. The FTSE 100 out of London is currently down by 0.8%. Germany's DAX is down 1.3%, and France's CAC 40 is down 0.8%, with EUROSTOXX 50 also down 1.1%. Now, US equity index futures for the Dow Jones, we are currently lower by a touch at 0.2%. S&P 500 E-mini futures is currently unchanged. And the NASDAQ 100 futures is currently up by 0.4%. Now, in terms of the currency market, the major currency pairs, euro dollar is currently lower by 1%. Aussie dollar is down by 4%. The New Zealand dollar also trailing by 3%. This is broadly in line with current risk sentiment, according to the European equity indexes. Now, in terms of the charts, on the screen right now, we have the euro dollar. And as you can see, the euro dollar has been hammered this week. It's currently down 1.9% on the week, and has taken out the weekly. This is the weekly time frame here. This is it's taken out weekly Fibonacci support between 12.37 and 12.81. Now, this is as I said, a Fibonacci support, and also an alternate was an alternate AB equals CD bullish pattern. Now, should we continue lower, further downside on this chart could drop the currency pair as far south as Quasimodo support at 0.778. Now, in conjunction with the weekly time frames technical presence, we are looking at the daily time frame here, and as you can see, yesterday snapped through Quasimodo support at 12.13. Now, this is a potential resistance now going forward, and this could, should we continue lower on the daily time frame, do take note of prime support at 1.0941, at 1.1. So yes, this is where we are on the larger, the bigger picture. As you can see, it is a clear downside bias, and also just to emphasize, the trend on the weekly time frame is clearly lower now after taking out the low around the, let me just get my crosshairs on, the low around the 2nd of November low in 2020. So this has confirmed a potential downtrend on the weekly time frame. Now, what this does, it's also in line with the monthly time frame. As you can see, we have been considerably lower excuse me, since August of July of 2008. Do bear in mind, though, we have been largely range bound since around January 2017, but overall we are lower on the larger time frames. So scooting across to the H4 time frame at this point here, we do have euro dollar currently interacting with a decision point at 111.14, 111.39. Now, buyers are appearing dry at this point, which could lead price to a test of Quasimodo resistance, turn support at 10.88 going forward. Onto the H1 time frame. Look, everything's pointing to the 111 figure right now. Should we get this far south? Do bear in mind that this psychological figure on the H1 time frame is plotted just above the Quasimodo resistance turn support on the H4 time frame, again at 10.88. So should we get this far low, do be prepared for a possible whipsaw below this round number. These are very common. Whipsaws above and below psychological figures are common. And again, do watch out for a whipsaw below this round number into this H4 Quasimodo support, which could lead to a potential short-term pullback. Okay, over on the Aussie dollar, again, like the euro dollar, this is the weekly time frame here. Prime support at 69.68, 72.42 is under considerable pressure right now. The Aussie dollar is down to nearly 2.5% this week. Very similar to the euro dollar. And look, if we do take out this prime support, do keep an eye on this weekly support at 66.73, which is, as you can see, a sharing chart space closely with let me just zoom in there, 76. Excuse me one second. Let me just enlarge that chart so I'll make sure I get the right figures. So this is, as I said, this is closely, it's just sharing chart space closely with a 50% retracement at 67.64 on the daily time frame. Now, for anyone that reads the daily technical report and the weekly technical report that goes out on the through the FP Markets Traders Hub, you will note the team highlighted this as a potential resistance area, and this comes in currently between 73.94. That's the top edge. That's the 200-day simple moving average there, and the 100% Fibonacci projection at 73.15. As you can see, we did come, I think it was within a pip of this area back in mid-January, and we have since sold off, and now we are taking on support at, I think that's 70.21. Now, should we get below here, we are looking then at a possible test of Quasimodo support at 68.69. Now, as you can see on the H4 time frame, taking out this daily support is firmly on the cards now, but we do have 100% Fibonacci projection at 69.98 on the H4 time frame. For any harmonic traders watching, you will note this also represents a possible AB equals CD bullish formation, which could bounce price, which could attempt to draw in some buying pressure and bounce prices higher. Now, of note, of course, on the H1 time frame is the key figure 70. I think it might have already been tested. Nope, we are on the doorstep of the key figure 70 with the RSI value currently circling the oversold region as we speak. So yes, from this point, I will be looking at the key 70 level, despite the bearish presence on the bigger picture here. I will be looking at this the combination of the key 70 level on the H1 time frame, and obviously the AB equals CD formation on the H4 time frame at 69.98 closely. Should we break below this round number, this is obviously in line with the bigger picture, and we should see further bearish moves transpire. Quickly over on the dollar yen. Now, from the weekly time frame, we did have a solid rejection from the 1.272% Fibonacci projection at 116.09. Now, this was in the shape of a shooting star, which is a bearish candlestick formation for any candlestick enthusiasts watching. And we did follow through to the downside, and it looked like we were going to reconnect with support at 112.16. Now, of course, that didn't happen. This week we are up by 1.7% so far, and this bullish showing is in line with the current trend since March 2020 of pandemic lows. So yes, do keep this in mind. On the monthly time frame, let me just scoot over there. We're not really seeing much in terms of, we are in a clear, we are higher. We have been higher since December, 2011-ish. if we continue to break out past this high here, there's a good chance we are heading for these highs above here at around the 125-ish region. But this is very long-term stuff, guys, so do bear that in mind. Now, on the daily time frame here, you can see that we at the bottom on the weekly time frame actually formed a double bottom pattern, and I think this comes in around the 113.50-ish. Let me just get my crosshairs on so I'm making sure we get the right values. Yeah, the 113.50-ish region has formed the double top pattern. And we also smashed through the pattern's neckline at 115.06 yesterday. Now, what this does is this potentially sets a take profit target. And I think, you know, this will go potentially past the Quasimodo resistance here if the pattern plays out to completion. Let me just mark this up. Yes, so we're looking at just, whoops, we're looking at very closely at, yep, we're looking at just above the the double top pattern. Sorry, we're looking just above the Quasimodo resistance at 116.56. Should the pattern continue to fuel technical buying. Let me just get rid of that. Okay, so over on the H4 time frame. Now, in conjunction with the bullish presence on the look, let me just add just one thing, just really quickly. The Quasimodo resistance here at 116.33 on the daily time frame is plotted just above the weekly time frames Fibonacci resistance. So do bear that in mind. We could get some reaction here for any pattern traders looking for a to the pip profit objective. Do bear that in mind. We could reverse before that pattern objective is achieved. Now, over on the H4 time frame, we are currently attacking a decision point at 115.49, 115.24. Now, the lack of bearish response from this area, and it really does point to a possible follow through move to the daily Quasimodo resistance at 116.33. So do bear that in mind. This is largely in line, as I said, with the bigger picture here. Now, on the H1 time frame, we are currently retesting support at 115.48 and on track to form a potential hammer pattern, hammer candlestick pattern, which is generally considered bullish at troughs or in dip buying scenarios. Now, should we hold off this support here? This could be an area we see buyers come in from, targeting the 116 figure, which, as I'm sure you can imagine, is plotted just below the daily time frames Quasimodo resistance. So this could be an ideal target from this area. 116, between 116 and 116.33. However, do note on the RSI, we are seeing some, an early form of bearish divergence. So yeah, do keep that in mind. Look, just before I forget, on the RSI on the daily time frame, we have recently bounced from support at 40.50. Now, do note that during trending environments, between 40 and 50, a support zone does usually emerge, and it offers a temporary oversold region. And that's exactly what's happened here since around May of 2021. As you can see, we recently did bounce from the area in line with the recent dip. So yes, finally moving over to the pound dollar. And like the euro and Aussie dollar, we are considerably lower this week, currently down by 1.4%. Now, this really reopens the take profit target for the double top pattern, and that comes in around 1.3090-ish. So do keep an eye on this. This could complete further selling on the pound could complete the double top patterns. Formation. From the daily time frame, since connecting with the 200-day simple moving average, which is currently circling around 37.17, we have lost around 400 pips. We are currently down 3% from this area, and we are now on the doorstep of support at 33.50 on the daily time frame. Now, should we crack through this support here, this would give me an early indication that further bearish flow is on the cards, and it will be in line with a potential move lower on the weekly time frame. So do keep an eye on the Quasimodo support at 31.19 on the daily time frame. Should we crack below this support at, as I said, 33.55. Finally, over on the H4 time frame, a decision point at 33.40, 33.64 made an entrance yesterday, and this is accompanied with a 1.618% Fibonacci projection at 33.76. As you can see, buyers did attempt to make a showing here, but left resistance at 34.28, 34.44 unchallenged. Now, recent selling could lead to a potential break of this area, and which will expose the decision point, the H4 decision point at 32.41, 32.76. Now, in line with the bearish flow seen on the bearish position, I guess you could say, on the H4, we are seeing we did recently see a whipsaw. Let me just remove my crosshairs and expand the chart so we can all see. As you can see, we did recently whipsaw the 134 figure and test a Quasimodo support term resistance. Now, these are very common setups you will see in the markets. So Quasimodo supports or Quasimodo resistance, or as you can see here, a Quasimodo support turned resistance is an ideal area to help facilitate or help plan where a potential stop run will occur. As you can see, we broke through the 134 handle, tested this level almost to the pip at 34.14, and have since sold off, heading into, I believe that was the Europe opening, heading into, yes, Europe's opening. So this is an ideal whipsaw. This whipsaw would have triggered a truckload of buy stops, not only from protective stops from sellers looking to fade the round number, unaware of the level above, and also those looking to buy the breakout. You can see here we did actually retest the round number and push higher. Now, what this would have done is obviously attract bullish flow in terms of further buy stops, which would have provided liquidity for larger sellers to pump lower from this area. And that's exactly what's happened. As you can see, we have moved below the 1.618% Fibonacci extension at 33.83 and the 1.272% Fibonacci projection at 33.76 in recent trading. Now, this could lead us all the way down to 33.33 on the H1 timeframe, assuming we take out yesterday's low at 33.84. Now, okay, so that's a wrap from my side, as usual. Any comments or questions, please email the research team at marketanalyst@fpmarkets.com. Thanks for joining. Have a very productive Friday and, most importantly, a relaxing weekend. And I'll be back online bright and early on Monday at around the same time. Thank you so much for joining.